Hey, badass business owners. One of the questions that I get all the time is what's the difference between a cash basis and an accrual basis when looking at your profit and loss statement? Hey, badass business owners. My name is Tammy and I'm here to help you grow your business, but more importantly, grow those profits. And I am a huge fan of you understanding your business numbers, which means you need to really understand your profit and loss. And because I'm getting you all into your QuickBooks and into your bookkeeping system, one of the things that happens is when you pull up that P&L, it gives you an option. Do you want it by the cash basis or by the accrual basis? So what does that even mean, and how am I even running my business? Well, for most small businesses, you're on what we call the cash basis. And then for those of you that tend to take sales today, but you allow people not to pay for a really long time, or not necessarily a really long time, but more than the next day. You allow them to pay like in 30 days or later, or same thing, they allow you to get the goods today, but pay later. A lot of you are on what's called the accrual basis. So let's just talk about what the difference is. And what I thought we would do is something fun. We're going to use an example of a lemonade stand. And when we're looking at our lemonade stand, let's just say that we have lemonade that we are selling. And let's just say that for a cash basis, we're going to see how that works with this lemonade stand. So when we're looking at the lemonade stand and we sell a glass of lemonade and we take in $1, well, when we take in that dollar in a cash basis, we count that dollar today. Now, let's just say that we allow somebody to pay us tomorrow. They don't have to pay for their lemonade today, but they do need to pay for their lemonade tomorrow or next week or whenever. In which case, you would count that dollar on the day that you accepted it. So in a cash basis, you count the money on the day you took it. So either I take that money today or I take that money tomorrow. In a cash basis, it's going to be on that specific day. So even though I sold it today, it's on a cash basis. That sale is technically tomorrow because that's when I took in the money. Now, what about cost of goods? Well, that's going to work the same way. If I paid for my lemons and sugar to make my lemonade today, then I'm going to count that expense today. But if I don't pay for that lemonade, those lemons and that sugar until tomorrow, on a cash basis, I'm going to count it tomorrow. So as you can tell from a cash basis, it's on the day that it actually occurred. So if it happens today, that's when I count it. If I do it tomorrow, that's the day that I count it. Nice and simple. Now, what about if our lemonade stand happened to be on the accrual basis? What would that look like? Well, on the accrual basis, if I paid today, I would get paid today. I took the sale, I did the sale today. It counts today no matter when they pay. If they pay today, it's today. If they pay tomorrow, it's today. If they pay next week, it's today. I did the sale today. That's when I took it. And then same thing when I'm picking up my lemons and stuff. Let's say I went to the store, they let me take the lemons, but I don't have to pay them until tomorrow, in which case it's still today. Today is the day that I actually accrued the expense for those lemons. Now, here's what happens. There's an extra piece that goes in because I haven't received the money and I haven't paid the bill, but it all counted today. So this is where sometimes you'll hear the words accounts receivable, which is money owed to you, and accounts payable, which is money you owe to others. So when I'm in the accrual system, if I sold it today, but they're not paying me until later, I have what's called an accounts receivable. It means I've got money that's coming and owed to me in the future. When I go out and I buy those lemons, I don't have to pay for them today, but I owe somebody for those lemons. Now I have an accounts payable. I owe somebody. So if you remember in the cash basis, we just did it in the day that it occurred. So I don't owe people money. You know what? I got the money today. I count it today. I paid for it today. That's when it's counted. But when I owe somebody money or somebody owes me money, that's where you start hearing those terms, account receivable, accounts payable. And those are tied to the accrual system. So does that kind of make some sense a little bit out of this? Cash basis is in the moment, the day you do it. And the accrual basis is the day you accept the sale or you made the purchase, even though you're not being paid in the future. I know it gets really confusing, but for the vast majority of you, you are on a cash basis. And for the others of you, you're on accrual basis. Now, who gets to determine that? Believe it or not, it's done when you do your taxes. Accrual basis are definitely for people that have more complicated businesses where they're not getting paid right away and they're not paying their invoices right away. A lot of them are on that. But for the most majority of you, like I said, you are on a cash basis. And what we're going to do is I'm going to pop up on the screen a little bit of a highlight of the two of them side by side. And you're going to see that we have the income cash basis recorded when the cash is received, right? And then on the accrual basis, it's recorded when it's earned, even if the cash is not received yet. You'll see that here on this. Now, on expenses, it's recorded when the cash is paid for those expenses. And on an accrual basis, it's recorded when they are incurred, even if you the cash hasn't left the business yet, that you still owe it, right? Obviously, for simplicity, simpler to understand is the cash basis. It's what most of us are thinking. It's the money in our pocket when we pay stuff. It's really simple to keep track of the money that we have on hand. So that's why a lot of people like that cash basis. The accrual basis, more complex, but you need to be able to track what money people owe you and money that you owe other people. So that's why it gets a little bit more complicated when we have that. And then when you're looking at your P&L, sometimes it'll say, hey, I've sold a lot more. And you're like, well, it's not in my bank. Well, it's not, because you made the sale. So your sales are very high. Your bank account's going to look lower in most cases because you haven't received that money. But if you look at it from an expense standpoint, you might have the money, but because you haven't paid it, your profits look much higher than they are, but you owe money still for those products or ingredients, whatever it is that you purchase. So you have to be a little bit more careful when you're reading your profit and loss statement when you're using the accrual basis, because sometimes your sales look much higher than what your bank account feels, or your profits look much higher than what you really have because you haven't paid that bill yet. So hopefully that makes a little bit of sense. Now, the reason that you see accuracy on here is because in some form, some people will say that one is more accurate than the other because in some cases you haven't gotten the money yet. So like for example, you may do something in a cash basis, but you're not getting the money to the next day. So it's not quite reflecting your sale yet, even though you know you're going to get the money the next day, or it falls into a different month. Sometimes what will happen is we'll do something on the 30th or the 31st, but it doesn't hit until the next month. So it's going to kind of throw off the 2 months when you're on a cash basis because you really did the sale in this month, but you didn't collect the money until the next month. Does that kind of make some sense? So cash can kind of get a little bit of off. So they both are confusing and correct at the same time. You just have to make sure you're learning how to read whichever direction that you are looking at your P&L with. And like I said, most of you small businesses, you're using the cash basis nice and easy. And for those of you that have more complicated businesses, or you, like I said, you're not getting money for weeks at a time, or you're not paying your bills right away, typically you're on the accrual basis just because you need to account for the money that you owe somebody or that somebody owes you. So hopefully this has kind of helped you with your small business and understanding the difference between a cash basis and an accrual basis. Just once again, when you talk to your tax person will let you know what kind of a basis that they have been filing your taxes on, or looking in your books, because sometimes people set them up wrong and their QuickBooks says one way and the reality is they're doing it the other way. The problem is once you start one with your taxes, you kind of have to stick with it. So for those of you that tend to not get paid right away, or that you have bills that you pay later on, you might want to talk to your tax person just to find out how they have you set up. But for most of you, just be on the cash basis because you take your money in real time usually. And if you're not getting your money for a day or two, that's usually still a cash basis because they might swipe a credit card, but that the bank doesn't give you the money for a day or so. So, sometimes that throws some people off as well. So hopefully this helped you out, and stay tuned. Make sure you subscribe because we're going to keep teaching you more about your business numbers and how to understand them. And if you really want to understand them even better, don't forget to check out the Know Your Business Numbers course, and check out the show links below and it'll help take you there. With that, I'm out of here and I will talk to you next time. Bye for now.